There's a lot of things going on here, so let me kind of start at the top. We downgraded tech 2 weeks ago because all these stocks are up so much. In the context of an S&P multiple that's down 10% for the year, why is technology the only sector that has not had a rating re-rate? Okay, the reason why is because there's a rolling bear market going on, and people have just been jammed into fewer and fewer stocks here. Okay, that's all well and good until something happens. And here you go. We have 2 of the FANG stocks basically missing numbers, not good enough, missing flat out. And I would argue that the quarter last night was one of the worst I've seen in 10 years in terms of how it was managed. The big surprise to me yesterday, I think, to investors is they just reported the first quarter and they basically told us everything was fine. So how do you get blindsided in 3 months and then have to lower that
Well,
much?
actually, Zuckerberg did say that margins will be coming down.
Correct.
And that they'll be under pressure. Gave no indication that this would be it.
Right.
Did he say how much?
No.
I mean, that should have been the key element, though. We knew margins were coming down. We knew spend was going up.
Let's keep it broad, though.
Right.
Is tech in trouble?
Right. So it's not in trouble in the long term. It's in trouble in the short term because it's overowned. Expectations have gotten elevated. The stocks are up too much in the context of a market that's re-rated. So what this is, you know, people have to recognize now is this is not a defensive sector. This is not a low beta sector. So when you have Netflix and you have basically Facebook blowing up, okay, it reawakens people's idea that these stocks are risky. And they may be more risky than you think because of these issues. You have to see people take their exposures down. Even if Amazon puts up a blowout number, which, by the way, should happen, why would I buy more? Why would I buy more? Knowing that the volatility now is higher. As a risk manager, right, and I look at my portfolio of stocks, and I've got way too much exposure in these stocks. You have to just take it down a little bit. That's it.
Let's go the other way with that. If Amazon misses tonight.
Oh, well.
Right. Does that...
That was a lookout below. Oh.
That was
okay.
This has been a warning shot, but if Amazon tonight does miss, does that mean basically the ATM, the flood on the ATM for the withdrawals are
Well, that's just it. I mean, so 2 out of 3 have been bad. Google was spectacular, as Steve mentioned. By the way, though, Google went through this earlier. Google went through the margin compression in the last year, and it underperformed, and they spent too much money in the first quarter. So it already went through this. And this is just, once again, part of the rolling bear market. Now, Facebook, the good news on Facebook is they reset expectations. Okay, good for them. Netflix probably reset expectations. Do I expect Amazon to miss? No way. I think the quarter's going to be great. Our analysts are saying the same thing. But is it going to be enough? So, but if they miss,
we're 40 points away from a new record high on the S&P.
Yeah.
You say rolling bear market. It sounds as if we're in this gloomy outlook.
Yeah.
I got the small caps, I got the mid caps, I got tech, all of these places that have been hitting new highs. That doesn't feel or sound like a, quote, rolling bear market to me.
I know it doesn't look at, and that's the trick, right, is that we've had, and let's go back to the beginning of the year, right, which we had the euphoria on the tax cuts, okay, everybody got excited, a little too excited, and the thing that's been weighing on markets this year more than anything, we've talked about this numerous times, is that the Fed is tightening much more deliberately than they have since the crisis. And the financial conditions tightening is now whacking basically various assets, the weakest first, and it's going sequentially. And it's now finally getting to the last bastion of safety, which is U.S. growth stocks, small caps perhaps, which we also downgraded 2 weeks ago. And then once that's over, I think we set up for a very strong finish. But we have to go through this final piece. Makes no sense.
Didn't we have a rolling bear market, if it is a rolling bear market, but didn't we have tech attend that bear market twice in the last year, where we were sitting here and saying, hey, these stocks are down 10%. They're correcting the group as a whole. So why couldn't you make the case that tech led the rolling bear market and has been through that, and now the good ones are being rewarded, like Microsoft and like Google, and the bad ones, meaning the ones that miss, don't live up to expectations, are being penalized. But as the market's maturing in later innings, it's not that quick bounce back. I think what was endemic of the issues with the market in narrow advance was that there was no reason for Facebook to move up, you know, almost by a third.
If Facebook would have moved from just under 150 to today, let's just call it 180, let's just make a round number, right. Most of you, if not all, would have said, you know what, that's been a nice rebound from the depths of the Cambridge Analytica low. But to get above $210,
it was crazy. It's lunacy.
But that gets back to the setup. The setup was investors were duped in many ways, thinking things were better, and then they have to readjust to a worse outcome. I want to go back to what Steve was saying. I mean, you can make the same case though for financials. Financials have had phenomenal numbers this year, and they've re-rated by 20%. Industrials Yeah, Caterpillar talked about top of the market, but the quarter's good. The numbers are good, and it's been re-rated by 20%. So I just don't think it's.
I think that's because of the tariffs.
I understand, but you can't tell me that technology stocks aren't going to be affected by tariffs.
Actually, I don't think Google will be to a large extent.
Well, they may be fined.
They're fined, right?
Yeah, but these are the same issues. These are the same. There's tension in the global world right now amongst regions. And I think the fine on Google, by the way, is one of the things that held it back. And then they paid the fine. Right. Actually, it was a positive catalyst. So, look, it's happening. I don't think there's any doubt in my mind.
To your point, there's no question beta suffers the most when markets correct.
That's right.
So I understand your point. And I think it's a valid one.
But you're saying that
this,
in your words, this rolling bear market is eventually going to catch up to tech.
It's happening now. It's already, we've took 2 of the 4 leadership names out already in the last 2 weeks, right? So 2 are gone. 1 maybe already corrected, it already went through it, which is Google, and Amazon remains to be seen. We'll see. I'm not shorting Amazon. I don't have any interest in that. What I'm saying is that it's not a low-risk stock. It's a high beta stock. Okay, it's volatile and it's expensive and it's priced for perfection, and it's a perfection story. It is. It's a very good story.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.